Good evening, everyone. Good evening. Thank you very much for joining me. My name is Adam. I am from Trade with Precision. I'm definitely getting into the Christmas mode now, starting to relax and watch a bit more Netflix and just finding myself having my days a little bit more spaced and relaxed. So I hope yours are as well. Thanks for joining me this evening. The topic tonight is Forex and Metals Technical Analysis Deep Dive. So this week I have done 3 IC Markets webinar, and I think in the last month I probably did 3. So for whatever reason, I am the main guy this week, which is great. I love it. I'm up for that. Absolutely was going to say I'd love for this to be interactive as possible. So please don't be shy. If you have any questions, jump in, just go ahead and ask, type it into the questions box. So there's a risk disclaimer I need to give you a moment to digest. While you're doing that, I'm going to tell you a little bit about myself. Also, the heating is very hot, so I'm just going to switch that off quickly. There we go. And there we go. So I'll tell you a little bit about myself. I am based in the city of London. Sorry, I live outside the city, but I work in the city. And I trade my own capital. I'm a momentum-based price action trader. So technical trader. I trade whichever markets are moving, and those markets are normally currencies, Forex, commodities, crude oil, silver, gold, metal, precious metals, and then of course the indices, the US indices, maybe the DAX as well. That's really where I tend to find most of my trading opportunities. And then when I do my, and most of that is looking for entry opportunities on the 15-minute time frame and taking my direction from the 4-hour time frame. Now, with regards to my investment portfolio, which is stocks, which is made up of standard stuff, Costco, Amex, Microsoft, so on and so forth. That's usually looking for opportunities on the weekly or daily. Okay, so on the agenda for this evening, we're going to do some chart analysis of Forex and metals. Obviously, metals markets are multiple time frames. We're going to look at strong opportunities for trades. We'll create a watch list for traders to consider with strong support and resistance levels. This is very similar to what we did last night as well. It's very similar, but I don't. How many of you, can I ask, how many of you attended last night's webinar? How many of you were there last night as well? Because I really don't want to repeat for those of you who've done it, unless you're okay with that. Okay, so what I am going to do though is we'll create the watch list together. Okay. Cool. So no one. So there's no one who's listening this evening who, Godwin, you were here last night. That's just funny. All right. So we'll create the watch list together. Let's go across, and we'll come back to this at the end. Let's go to the platform, and let's have a look at a few things. So this instrument that we're looking at here is the DXY. This is the dollar index, the US dollar index. And this is the contract that lasts until March 23rd. Okay, good. And it's annoying to me because, like, I've been looking at this contract for months now, whenever we're on the platform, and it very rarely has that much data. It might only have a couple of weeks worth of data, and I find it very frustrating. It's very useless as an instrument. It should be incredibly powerful for us. It should be helping us determine. So if you've not heard of the dollar index, that's fine. So basically this webinar is aimed at folks at all different levels, from brand new to trading to people who might have been dabbling with it for a couple of years. But if you're not familiar with the dollar index is an index of the US dollar, its performance against a basket of other currencies. I think there's like 8 of them. And it includes Japanese yen, the pound, euro dollar, which is the biggest traded against, or is the largest, second largest currency traded against the dollar. And it includes a couple of other odd jobs like Norwegian krone or Danish krone, something like that as well. Dollar CAD, and so on and so forth. So you get a sense of what's going on with the US dollar. And that's really important because, of course, the US dollar isn't just in the currency markets. It's in commodities, oil, and precious metals, all priced against gold. Cryptos, Bitcoin is priced against, not priced against gold, priced against the US dollar. cryptos, Bitcoin, and so on are all priced against the US dollar. And of course, some of the biggest brands, in fact, almost all of the biggest brands we know, almost all American. So the US dollar has its roots everywhere. And so I wanted to get a sense of what's going on with the dollar index. Okay, so that's a weekly chart. Let's look at it from a daily perspective. And really what I'd like you to see here is kind of what we have here is a very bullish candle. It's a very bullish candle and it's a high low. So when we have a change in trend, it often starts this way. So we'll have a downtrend of lower highs, lower lows. We might have, and then as it changes, we might have a number of different ways that happens. You might have sort of slightly low, a new high, so it might break above this high. It could then produce, or often will then produce, a higher low and carry on up. So that's where you get that slightly higher low. And once you break this higher high, you now have a confirmed uptrend. So I'm watching that because we've got a high and a low, lower high, lower low, lower high, but now we've got a higher low. So we've got a situation similar to what we've seen here, but it's like that. And if we break solidly above that, we're in an uptrend. And if we don't, we could double top. We could double top. So this is a very powerful pattern that not everyone talks about. Sometimes in a situation like that, where you see the higher low, you see this part, you presume it's going to change trend. You presume that. And then what happens is it comes up here, you get a double top, and then it carries on down. So that could happen here. I don't think that's really the case. What I'd like you to see, though, is that just out of all these last sort of, how many is that? Probably about 10, 15 candles. I think we have, out of all of those, I think we have a lot of bullish, very big green candles, which tells you there's a lot more buyers in this downtrend than there really should be. And this particular candle today is very, very bullish. Okay, it's a bullish engulfing candle. This was a very bullish candle. There's very little data, so I'm doing a lot of analysis on a very small amount of data. And basically, my expectation from this is that we will probably see this broken. And my expectation, I think it's fair to say, and this will roll over the next 10 days, we'll probably see the dollar break up. The question is what happens there, because that's the next level, and then you got the next level up there. So I think it's fair to say we might see something like that. We could also see something like this kind of thing happen. I think there's a good chance. So this is really a key level. We need to see what happens between today and tomorrow. Do we tomorrow have another bullish day that closes like that? And if it closes well over that level, if it closes well over that level, then I would say we're probably in for a bigger move. But if it fails at this level, we could see something like that. So you've just asked a fantastic question. So the other question is, would you use something like TradingView to get more data? And the answer is yes, absolutely. Especially the dollar index. This is something that I tend to have. I tend to have a TradingView account almost exclusively just to look at the dollar index. But yeah, absolutely. It's a great. There's nothing wrong at the end of the day if you could steal whatever data you need from different places to make your decision. Good question. Okay, so the next thing I'm going to do is we're going to then compare that to the euro dollar. So what we're seeing now is some strength coming back to the dollar. Okay, so let me go ahead and move this over here, and I'm going to do exactly what you just suggested, which was a great suggestion. And just get us into that one. I should be in. There we go. Okay. So here we can see that dollar index. So let's get a little bit of perspective on it. We've got that really nice bullish candle, a lot more data. And so what I would like you to see, though, is what happens when we have a change in trend. Is the sound okay, by the way? Is the sound all right? Just let me know. So if a trend is aggressive, so let's say it's like this, consolidating, and then it breaks out. It usually has a big move, small pullback, big move, small pullback. Then it starts doing smaller moves and deeper pullbacks. As it's losing its momentum, it starts kind of doing that. And then it can often start to trend down, and then it starts accelerating again. So that's often what happens. So you can see how some of these moves kind of tend to do that. Now, it happens the other way as well. So when you go back to where we are now, you can see that we had our really fast moves. We've now started to kind of slow down a little bit. And so what happens is we're starting, it's starting to slow down here. So I am conscious of that we might potentially be turning around. So one of the things that I will often do, it's a very good way to get a sense of what's going on, is to go up the time frame. So this is a daily, so let's look at the weekly. So when you look at the weekly, you get a sense of it. You can see how the last couple of weeks we've had a big correction. Actually, the monthly really gives you a great sense of things. Okay, when you get a bit of a sense of history here, you can see that we had a big move. We broke out. This was our level of resistance. We broke out. We became overextended. We had a bit of a correction, and we're kind of coming back down now into the moving averages. We've also got some possibility. There's also, there's that possibility of, hitting the old highs here. I've said it before, I think we're more likely to come down into about this area. So I think the $100 mark would be a great place for price to come back to test for support. But we have reached the moving averages, and the moving averages are the earliest place where we would find some possible bulls, buyers returning into the markets. So it's very important to see how December closes, because if December closes as a very bullish candle, that would imply that there's a very good chance that the dollar is going to attempt to resume its move back up. Okay, it's going to try to resume its trend. I'm going to sneeze, sorry. Ridiculous. Okay, it's just teasing me. I'm feeling much better, but I was definitely fighting something off this week. So we could have that, and then the implication would be that the dollar is going to attempt to resume, but it's not the best place for me. I'd really like to see it come back down here or come back down here. However, so that's what I'm going to be having a look at. If we look at it from a weekly perspective, we've just really had a correction to the downside. There's no real trend in place, and it's just sitting on that 50-period moving average, just resting on that, deciding what it wants to do. So I'm just trying to give you some sense of what the markets might be wanting to do. And here's the next sort of major level is 108. You can see its resistance here, support here. So 108 would probably be the level that it would attempt. If it breaks through here, it's going to attempt to go up to 108. Then we look at it from a daily perspective. We can see how the angle is changing, and it's trying to work its way up. 108 sits up here, these highs up here, and so it might want to work its way back up to that. So that's really what I've got to get an eye on. If we now go back to the platform, you can see the euro dollar. So we'll bring in the euro dollar. Let's clean this up a little bit. And this is just so you can see the similar moves here with the euro dollar. And we've got some potential resistance in here, and we've got at the lows where we sort of are now. We've got the next ones up, will be a little bit up there. So it's a big exaggeration, but that's sort of where we are. And I want to see what's going to happen here. It's broken out of this bit of range. It's coming back to test it. Is it going to be able to break into that area? And if it does, then it's likely to continue up to here. Okay, there's also a bit of an area over here. If we kind of really want to get fussy, then there's a bit of an area here. So these are the areas of resistance. We've got the first barrier that it has to break through, then a barrier here, and then a barrier here. Okay, that if it's ultimately going to carry on down. If it's going to carry on down, we don't know. Traders can never really predict. I guess unless you're Larry Williams and you have like 100 years worth of data, and you can say, look, we have these cycles, and therefore we think this is going to happen. But generally speaking, most traders cannot predict where the market will be in 6 months. They can predict with a very high degree of accuracy where it's probably going to be in the next month or the next 2 months. But the further out you go, there's more that can happen. So this is the battle that's going on at the moment. And these are the levels that I'm kind of wanting to see what happens with that. So we've gone on to that weekly. You can see we've had a really nice big move up. We've got some exhaustion in here. And so the implication is that we're going to see the markets possibly just do a little bit of a retracement to the downside, which could be, if it's a shallow one, it could just sort of come back to here before carrying on. And there's also a little bit of resistance where we are here. So you're getting a little bit of a sense of what the roadmap is. Leon? So glad you could join us, and don't worry if you're a little bit late. I apologize. Excuse me for blowing my nose and everything. I'm just fighting off a bit of a cold. Okay, so this is what I'm looking for. It's normal in a move in a market to have a higher low. And so the areas where we could end up having those would be somewhere around here, probably we would get. Because at this point, and this is a common thing, by the way, that happens, that will always happen throughout your trading career. You'll get to a point now where you don't know if the future of the euro dollar is higher, or if the future of the euro dollar is higher, or if we're going to start working our way back down. That happens because you're stuck between the monthly chart with what it's predicting, and you're stuck between, say, the daily and the weekly that it might be giving conflicting signals. And so we could have the dollar decides to continue strengthening, and so we continue down, or you could have something whereby, you know what, things calm down and the dollar decides to go back down towards 100, and the euro dollar starts to strengthen as well. So, and both of those involve a likely correction to the downside. Does that make sense? Both of them involve the same thing. So what I think is highly probable now is a move down to here or down to there. And then we're going to find out if it can recover and go up, then we're golden. If it can't, then we're going to end up carrying on down. You know, then we're probably going to end up carrying on down. And what I was saying last night is that it seems to me, if you sort of think about it, the world doesn't seem as dire right now per se. We don't have the Russia invasion is not really going according to plan. It's not a big shock now. We've become accustomed to it. The market inflation stuff is sort of calming down a little bit. It's not getting worse. It's not getting worse. Now we're in a bit of a stage where companies might have to, you know, companies that were posting record profits at the beginning of the year are now potentially having to cut back on staff. The biggest drop out of all of them was Amazon, actually, is the one that's dropped the greatest, followed by Tesla. Tesla today, I think, touched the 70% correction from the highs. It's dropped 70% from, it lost 70% of its value from the highs. But the number one is Amazon. And so what we're not sure yet is, are we, you know, we might still be in a bit of a rough patch, or are we going to start to recover? And actually both could work out well. The markets could have a correction now and start to recover January, February, March. We could see the market stabilize, and by March everything has sort of gone back to normal. Or we could be going into sort of the second half. Maybe we had autumn before, now we're going into winter. It pays to be optimistic. It pays to be optimistic. We're not trying to be unrealistic. We're saying, look, those are the two options. But generally speaking, the markets tend to, they often do better than we expect them to do. So we're just doing a currency. What we're doing is a deep dive into the currencies at the moment. And what we're really looking to see, because we've broken these weekly highs, when you do that, we've actually started a weekly retracement. So if I go, monthly. So if I go to the monthly, we can see that we're sort of coming back up again into these major areas. And this is potentially where, if we close with a bearish candle, the implication could be then that we're going to head back down to those lows. So that's kind of what's happening. And the interesting thing about that is we should largely get a lot of that answer between now and the first week of January. We should be able to know. So by the time January kicks off and we're ready to start trading again, we kind of have a sense of maybe what things are going to be like. However, for now, it does appear very likely that we're going to see the markets correct. Okay, probably down towards these lows over here. So let's go to the daily. So what am I looking to see on the daily? Well, the first thing is I need to see a break below this weekly candle. So in order to get a swing high, you have to break the low. So you've got to break that low there, you come down below it, and then you start going down. And to have a swing low, you're coming down, then you often need to break above that high. So your next candle starts to break up that. So that's how you get your swing lows, and that's how you get your swing highs. And so this is our swing high. We need to break that low, and then we're sort of on our way back down, at least into this area. So that is very real. So what's that going to look like in terms of trading opportunities? Well, let's go and talk about what we expect. If we're in that area, then we know roughly what our sort of opportunities are. Let's do that. So There we go. So that's our area. You can see we're about to produce a lower high. The daily is about to go into a downtrend. You've got that strong resistance, but there's a high, there's a low, there's be a lower high. If we break below this, we'll then be kicking off. We'll probably start to accelerate. We'll start coming into this area. We'll find some support. There we go, some of that area, and then obviously more kind of down here. There we go. So I can get a bit of a sense of what's going on at the moment. You can see, I'd like to see if we can sort of work our way through this, break through that. So what are those trading opportunities? Well, we're on a bit of a level, definitely resistance here. Look at that. That's clear resistance and that is clear support. So there is that. When we zoomed out, when we went up to the higher time frame, we also saw that there was one here, kind of 0550. So they're too close to be the same thing. I mean, that's a 30 pip difference. That's way too far apart. 5 to 10 pips most could be similar levels, but 30 pips is too far. So yeah, I would expect some shorter term opportunities down to here potentially. Then we're going to have to see what happens here. Then if it breaks through here, then I'm going to be looking for those opportunities. So those will be actual trading plans for that over the coming week, if that's going to be the case. A little bit of a resistance thing here as well. You can see just a bit there. But these are the major ones. There's a big one. This was a bigger one because we see it on the higher time frame. That's how we know it's a big one. Cool. Does that make sense to everyone? Let's go look at sterling as well. So sterling is going to be similar. And you can see sterling has already started breaking down. If we go to the weekly, it's already broken that weekly low, which was a very nice bearish candle. It's broken it down. Where do we think it's going to go? Well, probably somewhere into this area. Let's go see. Okay, probably somewhere into this area, which is support and resistance. There we go. Not so much that, probably more likely into about this area. There we go. So that is more likely to be our minimum correction on that side. We'll see how it goes. Notice how, I mentioned this last night as well, we are underneath this red 50 period moving average. So when we're downtrending, we can't get over it. Then we managed to get over it, we bounced on it, and now we're coming back down towards this. So this area is going to be interesting for me to watch because I want to see the red 50 come up. I want to see price come down and to see if price can stay above that 50 period moving average. But if it does fall below it and come down here, we could find ourselves back underneath it again. So we actually have the same thing happen. Something to watch. I'm not going to make the conclusion, excuse me, I'm not going to reach a conclusion just yet. It's too soon. First thing to do is to see how it reacts when it gets to the level. If it breaks under it, then I can start to look for other opportunities further south. If it manages to recover really well, that's great. Then we've got, you know, there's not an unlimited, for the newbies, there's not an unlimited number of ways the market can play out. There's like 3 or 4, that's it. And so we're looking to see which one it's going to be. There's some shorter term trading opportunities where we know there's a very high probability the market's going to come down to about here. Then we don't know what it's going to do, so then we'll make sure we take shorter term trades, take our profit, and then we wait and see. And this is what traders do. Very, very important. There's an absolute crucial distinction between traders and investors. Traders always have an exit plan. You never take a trade without there being a stop loss in case it goes against you and a rule or system for taking profits. You never trade without that. If you trade with a stop loss and no rule for taking profits, you will go broke. You can't. You have to. The whole point of a trade is I have a minimum expectation of where I think this market's going to go. I'm going to capture some profits, and then I have like a best case scenario where it might continue to go up to there. So I want to make sure that I've captured some profits when it gets to the minimum expectation. And if it goes further, then that's great. But there's always a plan to exit on it. So people that are in something and then it just runs away and they don't take any profits, it's because they have no idea where they should have got out. And so when they just let it run. They expect at some point they expect the market to somehow tell them, oh, you should take your profits now, or they'll just know, okay, you should take your profits now. And it never happens that way. They're always like, oh, well, I was up like 20% and now I'm down to 1%. So you always have a rule that says take your profits when you get to a certain point. So that's it. Let's look at Aussie dollar as well, compare them. Aussie dollar here, you can see very bearish day today. So that's adding to that bearishness. I think it's very fair to say, and we've broken through these lows. I think it's fair to say, let's go have a deeper look. Let's go look underneath. Let's go see what's going on. And let's see what's going on underneath here. So, because now we started to break through that level. Our next major level here is probably in this area. It's a somewhat clean kind of setup. There's a bit of noise in this area. We'll see. Let's go down to the 4 hour. So here you can see it's starting to break down. It's got a good run down to that level. Let's go to the 1 hour. Just to see what's going on. Yeah. So well, that's not looking so good. Let's go to the 4 hour and see. So yeah, I'm looking more for breaks below here. And it's better to short the weakest one. So in other words, if the Aussie dollar is leading the way and it's very bearish and the euro and GBP are playing out that way, then I would short the one that is the weakest. It's the safest one to trade. But if it's not hitting low, I wouldn't get into it. They're not all going to move equally. Here's Kiwi dollar. So look at Kiwi dollar. Look at that. That's great because you can see that strong rejection. It's a double top. So there's the previous high. There's a rejection. That's pretty good. I think you've got a good chance of this going down to at least there, if not further. So we might have you getting down to about there. Let's go to the daily. Here's a bit of a level. Coming down to here. Let's go down to the 4 hour. Yeah, there's some good stuff here potentially. Okay, so looking for this to, now the problem is it's overextended. So at some point it's probably going to come down here, bounce, then potentially go up to here or up to here and then carry on down. But that's what I'm looking for. So I'm looking for sell opportunities if it comes back up here, because now that the temperament is shifting. Look at how these are just trending lower. They're both just trending lower, nice and bearish. So this is a beautiful sell climate. In fact, tomorrow is probably a good day to do a few short trades. So how do I do this as a day trade? I'm going to take my entry on the 15 minutes. It's a bit overextended now on the 4 hours, so that's a problem. But this is where the idea is. I'm looking for pullbacks, into these areas, continuations down. And so ideally, it's already overextended. I need this to come back up, and then tomorrow it's heading down. Then I can go straight down to that 15 minutes. So what I'm looking for here would be for price to probably come back up here because there's a bit of a level there, have price come back up to there, and then be heading down. And then I'll be looking for shorting opportunities. So if I can get in there on a single candlestick, entry, stop loss, 3 to 1. So generally that means I'll have about somewhere between a 7 and 13 pip trade size, 7 and 13 pips, which means my target is usually under 50 pips. And a 50 pip move is very highly probable if I time it right. Does that make sense? So I'm planning a potential trade for tomorrow. I'll see how the day goes. If I can do it and I can record it, I'll record it, and then I'll put it on YouTube and then tell you guys about it. But I like it. Kiwi dollar is good. And then we've got dollar yen. So let's move across to dollar yen. Dollar yen, I spoke a bit about yesterday. It's come back down. This is the first potential problem. It's at a very strong level of support, and it's trying to decide, same as the US dollar, is it going to keep going down towards these levels, coming back down here, or is it going to try and go back up from here? Okay, it's the same thing, monthly coming back in. Also another little bit of a level here, so you can see there's one in between. So it's trying to decide what to do. There may well be a continuation. This might be forming a little bit of a head and shoulders. We could have that happen. That could be the case, maybe, we'll see. But so yeah, right now it's trying to decide if it's going to bounce back up and what it's going to do in those situations. But interesting enough, when you look at it close up, it's looking kind of bullish. It's trying to break out of that. So it's doing a series of higher lows. The only reason it's not doing much now is because of this. So there's this thing, and it sounds wishy-washy, but the fact is, when the market does a really, really big move, it can often, if it doesn't correct immediately from that move, in other words, compensate from that move, it can then spend a lot of time trying to just recover. So this is recovery. This is just recovery after this big move. And so it's trying to decide sort of what to do. So if we can't break in here, we're going to see this starting. So if the dollar is going to weaken, or if the Bank of Japan's policies are going to have an effect, we're going to start to see this roll over. So in order for that to be the case, I need to see some real exhaustion here, lots of wicks, and then I need to see a big red candle to the downside. Big red candle closing below here for sure. Big red candle, and then there'll be shorting opportunities. But if I don't see the big red candle and I don't see all the wicks, then it's not going to happen. If it breaks up here, same thing again, it's going to go higher. So right now, the dollar yen is not the best one. It's definitely something that's worthwhile just waiting and seeing just a little bit to see what it's going to do. Because technically, it could want to come back up here, test support as resistance, and then go. That's a very fair assessment. In fact, I would say that's a high probability outcome. Can I look at gold? I'll do that. When you say pullback, are you looking for a particular percentage or point of interest? Good question. So usually I look for a pullback into the moving averages as one point. You can see here, you come back to the moving averages, go away, come back to the 10 and 20 moving averages. So that often happens. If that also happens to be to a support and resistance level, or if it also happens to be to a Fibonacci point, you get that and it pulls back to the 382 or the 50 Fib. So all of those are valid things that I might be looking at. But if I had to pick one, it should just be support resistance levels, if you ever have to pick one. The Fibonacci on top is a bonus. The moving averages on top, I think, is a bonus as well. Now, dollar Swissie's produced a double bottom. Might not look like much, but that's a double bottom. Okay, there's your first touch. So there's your actual bottom. There's your first touch. There's your second touch. The second candle is very nice and bullish. So you've got a bit of a wobble down, and then you've sort of got this, and a very nice bullish candle over here. That one. It's a terrible drawing. And so that's likely to come up to here, and if it breaks through, we're likely to see something like that. So again, there's signs that dollar Swissy is looking to move at least up to there, if not up to there, in the near future. Near future meaning next week or two, maybe even just the next week. When you say pullback, are you saying, yeah, that was a fine, I answered that one. What is your outlook on the yen for 2023 after the Bank of Japan monetary policy on the yield curve control? So my response is going to be sort of more from a technical trading perspective. One thing that I can say about dollar yen, specifically dollar yen, is it is capable of doing its own thing, meaning that Euro, GBP, Aussie, Kiwi, blah, blah, will all be doing maybe the same thing. Maybe they're all working around the dollar, and then meanwhile dollar yen is doing its own thing. So for example, all of the others could be strengthening against the dollar. And then there you go, dollar yen's weakening against the dollar. So first of all, the Bank of Japan, their biggest, as I understand it, their biggest trade partner is the US, and it's, you know, their whole economy is kind of tied to it. So they put a lot of attention into, and they have obviously some of the best traders in the world working for them. So they will trade those markets and do it. So my expectation, regardless of whatever they say and do, is always going to be, okay, what does dollar yen do? Because it can completely do its own thing. So it's definitely worthwhile to analyze it in isolation, not to necessarily expect it to give way to, you know, maybe all Euro, GBP, Aussie, Kiwi, Swissy and CAD are all doing the same thing. I wouldn't expect that from dollar yen. So with dollar yen, looking at it from a monthly perspective, and I can't predict the whole of 2023, but I do think there's a fair chance that we could see, it's not unreasonable, we could see it come back down towards here, which means that is what it would be doing for the next few months. It might slow down. It's going to encounter a bit of support in these areas around here. And so I think that's a fair assessment potentially where it could come back. You can see in the past, sort of up here, and then it worked its way back down, right? So that was like a big correction. Same sort of thing here. It's very fast here and very aggressive there. Excuse me, I expect this to sort of slow down a bit. That's another thing. But I think that's a fair assessment. I do also think though that if the dollar ends up strengthening, we could find that the dollar yen just starts doing that as well. But for now, it looks like it's just correcting technically. And that's so I would check it again on a month by month basis. But for the next few candles, which is the next few months, I expect it to attempt to target this area, if not this area. And so what is that as in terms of a percentage? So if we do that as a Fibonacci measurement, these are all great questions, measure from there up to there. It's interesting because the 382 is where it is now, and the 618 is where it is here. So Fibonacci is also overlapping beautifully with a few of these different things. So that's interesting to me that that's also a previous high. This is a good area for it to pull back to. And then we'll assess based on how it reacts there, then I can determine if it's going to go further or if it's going to bounce back up. Okay, I'll go to gold because I want to make sure that I answer them as we go in that kind of detail. And then anything else you want me to have a look at, you just jump in. So we'll look at gold. Okay, so gold, let's get the monthly perspective on that as well. For most of its history, it's traded relatively smoothly, and then it had its bubble. So this was absolutely that was a big bubble, and struggled to. It's beautiful when you see what had happened. It kind of went here, and then you've got these twin tweezers. That's very important because that's a double top. Tweezer effects like that are double tops and double bottoms, which is why I get 3 over here, which is very small for you to see. I'll zoom in a moment, but that's a triple bottom. So here, and it came back, and it tried again, failed, tried again, failed, tried again, and then failed, broke through here, and then just fell down. And once it got to this point, it was unable to get above that from 2013 to 2019. Once it had a nice, good, long rest, then it broke out, went straight up to, broke through there, broke through, went up to over 2000, 1900, 2000, so on. Then it had took another breather. Okay, so now we can zoom in a bit, because then took another breather, came back down, and sort of took a little bit of a breather here, did a bit of a double bottom, then took another run back up, rejected hard, came back down again. So now it's on this side of the 50-period moving average again. Notice how there we were below the 50-period moving average. On top of it a bit, we managed to stay above it. We're still trying to stay above it here. But this area is a mess. There's quite a few things that will cause some problems in this area, which is what it's battling with. Okay, you can just see some of these in this area. Let's go to the weekly and we can have a look, but you can just see there's a struggle there, a little bit of a struggle here, and we're stuck between those two. If we can get past that point, that's its next level, which is just above 1900. There we go. It's just this garbage here. So gold's going to be messy, and unfortunately you have to accept that sometimes gold is messy. Sometimes it's trending beautifully and sometimes it's messy. Now today's daily candle is, let's look at today's daily candle. So far it's a bearish rejection of a support level. It's underneath the 50-period moving average. It's also rejecting that. As a general rule, I don't really analyze prices reaction to moving averages, but I do think there's an argument to be made for sometimes algos. Lots of algorithms are potentially buying or selling at price connects with moving average, because I often see a reaction against it. So it's not something that I employ daily. It's when I'm talking to you guys, I will mention it because there are some interesting, it's highly correlated. So we have a rejection here, we have a rejection here, we have a rejection in all these areas here. So basically, if you had to put a line to it, we just can't get past 1800. If it closes as this rejection, we're probably going to see it come back down towards these lows in here. That's what the story is. It's can't get through, can't get through, can't get through. Okay, and then it'll fail, come back down towards these lows here. And then we'll have to see if it can recover from that. So if this is going to be the case, we have that same thing. We're looking to see a break of these lows. So if we go to the daily and we zoom in, we're still technically in an uptrend. Okay, just. We've got low, high. There's a sort of a mini little uptrend there. Series of these high lows, and we're sort of here as well, double top, and we're currently there. But I think there's a very high probability we're going to see it come down to here, and then potentially down to here, and then potentially down to there. At least, you know, parts of this week and next week. So tomorrow, guys, be prepared for the very real possibility that the markets are going to close heavily bearish. They might not, but it is definitely something that is on the table based off this current price action. And it could be a heavy close, and it's gonna sound bad. It's gonna if we just sort of bob down and close a little bit high, that's okay. I'm happy with that as well. But I think we're gonna see a heavy close, and that's gonna be a bit scary for some people. And you know what that's gonna do is that's gonna move a couple of big stocks that are gonna close there as well. But we'll talk about silver, then we'll look at the US crude oil, we'll look at the US stuff as well. Silver is much stronger currently than gold, but even that is going to take a bit of a move down towards these lows here if that's the case. It's still got last lows down here. So technically silver is still in an uptrend, guys, until we really break below that level. So it could come all the way down to here, double bottom, and carry on up. It could do that. I think this is where I expect silver to come down to. That's its high low. It's looking pretty, looks okay to me. It's stronger than gold, but that doesn't mean that it won't take a hit. The moving averages that I use are straightforward. 50, simple 50 period moving average. Just straightforward. 10, 20, 50 is a candle countdown, which is this item up here, the MACD and the RSI. Okay. Fractal support resistance is just these lines that are auto-generated. If you want some help, they do that. Marta, nice to see you again. Oh, gold. Yeah, we did gold. Okay. Let's do a bigger picture look on gold. So let's go to gold again. Let's look at that on a monthly. It's a good place for this, to me, I think, for this to try to work its way back up here. But this weekly implies we're going to have, and this is fine. This is normal. So think about this for a second. We were in a downtrend. We had a triple bottom, and it's come back and tested this. It's trying to basically go into an uptrend. And if we can get back up above the 50, it's fine. So I would say to you right now that gold is going to try to maintain that. But it could get worse before it gets better. It could come all the way down here, and then eventually work this way. And we could be here in February. That could be February, February, March. It doesn't have to, it's not going to happen necessarily next week. But I think it's definitely trying to turn around. What would be great is to see a series of candles like this in this area. That would be fantastic. Nice little double bottom, same thing again, beautiful. The simple things, guys, you wouldn't believe how powerful simple things like double bottoms are and double tops are, and head and shoulders, so powerful. Would you look at gold and other commodities to get a confirmation on bias? So that's crude and silver and gold. Let's look at crude oils. Okay, so crude oil is a slightly different animal. Very bullish here, but this correction is, there's a rejection there. So it had a rejection there, then another rejection. It's pulled back. It got back into the moving averages, and it tried to produce a bullish candle like this that was like this. Then the next candle was supposed to carry on going up, and it didn't. It's starting to go down. So I suspect this is where oil's coming to next, and then we'll see. And then we will have to see what happens. Can it find some support? So that could be 2 or 3 months away, and then we'll see. If it breaks through that, we're going to see it come down. All of this is, we had oil here. That wasn't so long ago. That was 2020. We had oil down here. So only 18 months ago, it was, relatively low. So we can have a comeback 18 months, 2 years ago, we could see it do that. Crikey, it's almost 2023. Anyway. So yeah, I think we're likely to see, look, you can see the buyers coming in, right? It's kind of cool when you see this stuff happening. So when a candle is quite weak, like it's heavily bearish, it'll tend to close with very small wicks. It'll tend to close quite near the lows, okay? So like that. When it's bullish, you get the same thing when it closes near the highs. My concern is when you get one candle that has a wick, that's normal, but then it tried to go up, failed, tried again, failed, and it has a wick and it has a wick. So what's happening in this whole area is you have buyers trying to push up and sellers trying to push down. And there's a battle going on. What could very well happen is the battle pushes it back down to here. So there'll be a breakout. Something will happen, maybe the news, or there'll just be a thing that caves. But for now, it's trying to stay above that level. What would make me think it's going to be really bullish is if I got a candle like this over here, which, you know, could happen. And then we're going to carry on up. This is weird though. To me, it seems that's where it is. It's at the old highs. So we're going to have to see how that goes. Let's look at the weekly. So the weekly is trying. This trend is still in place. I hate to say it, up to here. It's still a downtrend. We could go all the way up to there, and we're still in a downtrend, and it can carry on down. So shorter term, you could see some exhaustion in there and in there. There's not a lot of buyers. There's just not a lot of buyers. Just not, they're not there. Bouncing up now, but make no mistake, guys, it's in a weekly downtrend until it gets above there. Then if we look at the daily is in an uptrend, okay? So the weekly highs up here, the last daily highs up here, okay? So it's in an uptrend. There's a major level of resistance and support. It's going to work its way, try to work its way back up to here probably, but it's battling. Excuse me, I have to see how that goes. But the majority of the prevailing trend is to the downside. Don't get fooled just yet. Even though we have a daily uptrend here, it's not as super strong yet. It really would get strong as it could break above that. So just if as a trader, if I was buying, I'd be very cautious. Very cautious. I'd be keep an eye on these levels. You know, there. Keep an eye on these levels. So if I am trading it up to there, I'm going to make sure I've got a lot of profits, got my stop loss in place, so that if it does come back, if it is a rejection, I'm ready to go out. So if it breaks through, then I'll cautiously trade it up to here. So it's baby steps, basically, just baby steps while we do that. Then let's have a quick look. So that's crude oils, gold, silvers, some of the yen crosses. So let's quickly go through some of the yen pairs and CAD pairs very quickly. You can see a lot of them starting to head low. We've got those weekly downtrends, lower highs, lower lows, big. Usually means it's coming at least back down to the 50, which is in this area. That monthly is still in an uptrend. For now, it looks more bearish. That was euro yen. So pound yen, very bearish. So even pound yen's not even consolidating. That's just going. So remember how I said to you dollar yen had this attempt to come back up here, but it was quite weak. Pound yen, it's just going. It's very weak. It's good for trading opportunities. But yeah, it's battling. Aussie yen, also very bearish. Look at that. Also broken through back down to those levels. Kiwi yen, interesting. Hey, Kiwi, there we go. I was about to say, look at that strong push off that resistance level, but it just couldn't get through. Couldn't get through. It needed an excuse to head south. So yeah, there's a few of those I'd keep an eye on. Then the CAD pairs. So you've got dollar CAD. Wait for it. Dollar CAD could be breaking out of here soon. It's quite bullish. Dollar CAD could be breaking out to the upside. That could be good. So what does that mean for Euro CAD? I think this needs to have a correction. I think we need to have this come back down quite a bit. But if dollar CAD is going to keep hitting, we might do a minimal thing and have it keep going. So keep an eye on that. That's interesting to me. But look at the exhaustion here. This is not as strong as it seems. It's a really strong trend, but there's a problem here. It's cautious. I wouldn't trade that. It'd be very cautious. Pound CAD. There you go. Pound CAD is starting to correct. Looks good. So short term, there could be some shorter term, higher risk trades of it coming back down, and you do very small 15-minute sells on the way down. And then when it comes down to this level, then you expect it to maybe turn around and head back up. Pound CAD, Aussie CAD is a little bit not as bearish. Kiwi CAD could be coming back down. You can see it's created that swing high. It's overextended. It's just so overextended to the upside. It should be able to work its way. You know, here's the 382. So it's fair that it could work its way back down to here. Could, maybe even to the 50-foot. So short term for me, opportunities, next few days, maybe the next week, if I'm trading, these are the things I'll be looking at for those, just to trade down, because once they get you, they could turn around and go back up. But they are definitely overextended and they're snapping back. I hope that makes sense. So it's higher risk because at some point it could turn around and keep going, but there's still very high probability that it's going to at least go from there to there. And that might not look like a lot, but when you put it in a box, when you look at the distance, like that, and then you go to the daily, and you go down to the 4 hour, you've got a lot of potential trading opportunities on the way down. There could be tons. Okay, let's have a quick look at the indices. So let's look at the US indices. Now, I don't know if any of you follow what I do, but there's a YouTube channel. Give me a second here. If you want just to hone your technical skills, just Google London City Trader on YouTube, and then there's a whole week ahead analysis, weekly analysis, and it's worth your while to go. I do all the markets as well, and I'll do anything you request. So if you want to, I'll go do that. But if you can go back, you can see how I was looking for this week based off this bearish candle across the board, expecting the markets to have a bit of a correction. And we've started a bit of a correction. If you have a look at the tech ones, we started breaking lower. So we had last week's very bearish candle breaking lower, and it moved down. And that's why I said tomorrow, we haven't reached these levels yet. That's why tomorrow we could keep going and close. Leon, okay, I'll tell you what. I was about to say I promise, but I don't want to let you down. And I very rarely promise because I hate letting people down. I was thinking of doing one for the platform that I use, which is just it's not a broker, it's just a chartered platform like TradingView. But I'll try and do one on the position size thing. You've got my email address. Just send me an email next week, and I'll try and do one for you. Okay, really, I'll do it. I'll put it on YouTube, and it's there because it's a great tool. Okay, and I'll try and do it. I haven't mean to do it. I've got no excuse now. I should be able to do it. So this is what I'm looking for. The position size calculator that Leon was talking about is a tool here that will allow you to calculate. It will help calculate 1% of your risk. It puts the draw lines on the chart. So if you go and you put PSC Trader on the chart, I've done something here, not the scripts, this. And then you can, did I do this? So then you can see your entries and your exits, and you can calculate 1% risk. You can just do that, and it'll help you place your entries and everything manually, automatically, and you can just use it. Works very well. It's very cool. Then, I used to think it was kind of intimidating to learn all this software, but these days most people have to know some Photoshop maybe or some Excel. We learn a lot of software, and so this kind of stuff actually, given the complexity of things like Excel and Microsoft Word and PowerPoint, I don't think this is any more complex than that. I think if anything, it's about the same. It just psychologically is a bit more intimidating. So there's the FTSE 100. Actually had a pretty good day, but it's in a very dangerous area. Remember the chart we looked at just now that just failed? It was a Kiwi CAD. What was it? Kiwi yen, something that we looked at that just had like failure at this area, and then it crashed. So when you look at the UK 100, you have a similar thing. We could have something where it just gets knocked back. We'll see. The DAX had a bit of a not so strong day today, and then we start to look at a few of the others. We've got the Japan, the Nikkei knocked right down. The ASX not knocked down as much. The Russell 2000 getting knocked down a little bit there. Hong Kong is generally, I was saying last night, China and Hong Kong, they should be taking a bit of a beating, but they've been having months worth of sell-offs, years maybe. Excuse me. A couple of years worth of sell-offs. So actually, out of literally just the ones that I look at, I've seen many exclusively just Hong Kong and China where I've seen that heavy sell-off. The rest of the markets have only sold off this year and already have been trying to recover a lot of that part. So that is something that I'm looking for. And tomorrow, I think it'll be interesting to see if the markets close low. It's not something to panic about because the markets will recover. And if we're lucky, we're actually at the tail end of it. In other words, 2024 might recover and go all the way back up. Some of the markets have already recovered, not necessarily tech stocks. Sorry, my eyes itchy. But it's a winter and it's good because it brings the stock prices down, which means if you have the money and you can buy, you can do it. So we've got about 3 minutes left. I just want to talk about a couple here. So let's look at Apple. So Apple looks to me as though that's a bearish breakup pattern. If this level doesn't hold, we're going to see Apple drop significantly down to, it's going to be quite scary. It could be a similar, I mean, similar distance, at least 100. Could happen. I've not seen it before, but it could happen. If that's the case, we could find out something Apple comes out and reports something, and like all of a sudden there's a drop in there, we'll see. But if it can hold at this level and break above these, so in other words, if price can stay above here and break above there, I think we're fine. Then that bearish breakup pattern will be eliminated. Let's look at a few of the others. So we've got Berkshire Hathaway. That's okay. Good recovery. BP, crude oil stuff, energy stuff. That's fine. Costco also looking like it could be ready for a bigger sell-off down to here if that's the case. Walmart doing okay. Really doing okay considering. Also near its highs. AMD technology chips, okay, so those are AMD are your laptop chips and things. AMD Ryzen, so gaming and everything. You've got NVIDIA also gaming, graphics cards and so on and so forth, all really big in the movie industry as well. So look at that strong rejection, that's going to head down. And again, I was saying this could be an inverted head and shoulders. Might look pretty bad now, but that could be your shoulders, your head. You could have something like this, and then you're on your way up. So there really is a way, there's a path to a way in which 2024 could be an amazing, amazing year. So we're not there yet, but I'm just saying, remember this, that if in a month's time this has started to break above here and it did form that, or 2 months time, you know, then we're up for it's on its path to recovery. And then lastly, let's just look at Tesla. So there's Amazon. Amazon's fallen the most, quite a bit. I feel terrible. Yeah. Anyway, I've got a sort of potential brother-in-law who was at Amazon, left about a year ago, but he had stock options, so he didn't sell here because he was like, well, it should maybe recover. Anyway, I feel bad for him. And Tesla, which today is down at like 124 as we speak. The low of it now 122.25. If you're curious, it's about this. I don't know what this. That's probably from the split. So they did the stock splits, and so the data is a bit messed up. That happens. But generally speaking, from the lows, from the all-time highs back down, it's about 70% off the highs. So what would I need to see to feel comfortable that Tesla starts to recover? Well, first of all, we are very overextended to the downside. I need to see, basically, I want to see a weekly uptrend. That's it. I need to see a weekly uptrend, and that's not going to. That will take to go from where it is now to a weekly uptrend would take, I don't know, 3 months, 4 months. So there's just, you're not going to know anything about Tesla for at least 3 months. But if it's turning around, this is the first place I'll talk about it. This is the first place you'll hear about it. Okay, so lots of stuff. It's exciting. You have to. It's hard to take your mind and to get your mind to see everything as a potential opportunity. It's horrible, especially if it's got your money in your potential. If you're in a trade, you're stuck the wrong way, and it's very hard then to see the light of it. But if you understand the difference between investing, so you're thinking long term anyway, and then it will recover probably. And if I can't imagine Amazon going nowhere. I can't imagine them going anywhere. Amazon should be here forever. They're super strong, and most of their money comes from the cloud services. So. Whereas Meta, I'm not convinced. I don't think they are what they used to be. So there's some companies where I can't imagine them going anywhere. I think Google will stay with us probably for a long time. But anyway, we'll see how the next year plays out. And then whereas with trades, because you have a stop loss in, you might take a hit, but then you can start at least recovering it when you go the other way. So it's interesting. You start to have to learn to see the opportunities in all these things. And even if maybe while my investment portfolio is coming down in value, so to speak, it's also the same time as a buying opportunity. And a money-making opportunity in terms of trades. And then by the time you get back up, you've been making money. It's almost like you were able to have a policy that said, well, for every day it's offsides, we'll pay you some, premium, which is what options are anyway. All right, there we go, ladies and gents. Thank you very much. We've run over by a minute. We're fine. But I want to have I got a link to past webinars. Dawn, can you send me an email? There isn't so much as a link to all the past webinars, I don't think, but there's a link to like the last few webinars because each webinar has its own link basically. and then I will try to help you out in that way if I can, and send anything that you want through to adam@tradewithprecision. There we go. adam@tradewithprecision.com. So yes, thank you to all of you, by the way. Wishing you the absolute best. Have a great silly season and a holiday break. Merry Christmas, Happy New Year's if I don't see you between now and 2023. And obviously wishing you the best for you and your family, and all the best in 2023. Come back with a vengeance. Yeah, and that's it. I look forward to seeing you then. So thank you, ladies and gents. Have a great evening, and I will see you soon. All right. Thank you.